So Bitcoin and the stock market, they're at a crucial juncture now because we're about to experience something called peak inflation. And that's a very important concept. I'm going to explain it. And that's ready for some big moves in the stock market to come. So peak inflation, what is it? And what can we do about it? Here we go. Basically, 3 days ago on Wednesday, the inflation in America came out to be 9.1%, and that was pretty high. So basically, the market had an initial bad reaction and went down from about 20K to 18.8, 18.9. So it dropped back into 18 again, but quickly recovered. And I said, this is highly unusual, and we need to take this seriously. Does this mean a big bounce is coming, or does it mean this is like the bottom of the bear market? And keep in mind, for Bitcoin, it's still traveling in this rising channel. Usually, I would just call that a bear flag, and chances are, in the short term, it's still quite possible for it to break down. To break down from this bear flag. However, we're going to look at something that's more important for the medium term, which is the next 3 to 6 months. It's something we could call peak inflation, and that is this chart that I have been showing everyone. See this blue line here is basically let me make it bigger. This blue line here is basically the inflation. Whenever inflation peaks, see like here, when inflation peaks, right, and it starts heading down, then we get the bottom of the market and we have massive runs like this. See, inflation peaking here, that's bottom of the market, and we have these big runs. Inflation peaking here, and a big run. Now, this is the SP 500, and if, as we've seen, SP 500 goes down, then crypto, Bitcoin goes down, SP 500 turns up, has a big run, and then crypto and Bitcoin has a massive run as well. So imagine if this started going down, then of course we're going to have a big run in the SP 500. But however, we're not going to compare to this period. We're going to compare to something that's more relevant to the conditions we're in right now, which is stagflation. Now, in stagflation, basically, it's like in the 70s, it's when inflation was high and the economy was not growing and was in recession as well. So, for example, if we look at this peak, and this peak, and it's more comparable because see, look at how high inflation was back then, and inflation was high, but you also had it's higher than even today. But then when they turned down, the stock market bounced up as well. Keep in mind though, we're not talking about these type of massive bounces. We're talking about these type of bounces, right? They're not huge, like especially that bounce there. They're not huge, not like this, but they're still worth catching from a shorter to medium term point of view. So let's have a closer look at these bounces. So let's look at the date where we had those big bounces. So for example, back in the 70s when peak inflation and stagflation was happening. So this was the first one we have is 1970. So if we look at that, this is when inflation was around 6.2%. This was peak inflation, and this was January 1970, but then it took the bottom of the market. Peak of inflation was Jan 70, peak bottom of the market was May, so it was 4 months later, shall we say? Yeah, 4 months later we got so it was slightly delayed. That's because inflation wasn't going down straight away. It was like kind of doing sideways, then started going down. And let's look at the bounce. So from a low of 68 to a high of low of 68 to a high of 121. So that's like almost a 80% bounce. So that was a big bounce off the in 1970 and bounced for 3 years from 1970 to 1971. Even if we say from 68 to say a high of 105, that's like a 50% bounce there. So that's in 9 months, made a big bounce as well. So the second time this happened was 1974. We had peak inflation here, and that was 30th December, so end of 74. And inflation fell away very quickly, so the market responded straight away. In fact, market had already bottomed earlier, anticipating this bounce. So if we just take the bottom of the market here, if we take the low in the market, let's say it is low is 66 in the SP 500, and it bounced up to the high there is 108. So again, that's like a 60 something percent, 65% bounce. So that's another big bounce. So let's look at the next one, 1980. Again, why are we comparing these days? Because look at how high inflation is. On these days, like inflation here is 14.8%, right? I mean, right now we're at 9.1%. So that's like, here's 12.3%. So that's why we're comparing to that period there. 14.8% inflation started peaking here and peaked exactly at the same time as the bottom of the market, which is March 31st, 1980, and then went from a low of 100 and bounced up to a high of 41. So that was a 41% bounce as well. So to keep in mind, in the three, inflation, peak inflation instances we've seen prices bounce from up like what was this 60 something percent, and this was like, if you count these 3 years, like 80-90%, and then the 74 bounce was also like a 80% bounce, 70% bounce, and then this one was smaller, but it was like a 60% bounce. So each time when stagflation, or when peak inflation happens, there's a big bounce. Now, how do we know that peak inflation is happening? Well, the way we know is we look at things such as, say for example, okay, now we look at industrial commodities, something like copper, right? Why? Because if you're going to be producing anything, you're going to need copper. That's it's just a basic industrial metal. And let's see where we'll turn that off. And we see copper has basically crashed, right, from a high of 103 copper futures down to, no, that's not 103, sorry, from a price of $5 down to about $3. So it's had a 40% crash. If we look at, oil is one of the, obviously everyone talks about it. Joe Biden gets up there and talks about it. We'll look at the Brent crude, for example. Brent crude oil. It's also come down quite a lot from a high of, say, 140, right? 138, 140, down to about 100, and sometimes going to as low as 95. Say if we look at silver is also, it's a precious metal, but it has some industrial components as well, because it's used in industry, like some solar panels uses silver. I think it's just SIL. Yeah, okay. Let's just have a look at SIL. So silver, for example, has gone from a peak price of around 50. That was this time a year ago, down to now 23. So if silver price has halved. So all of this is indicating to us that, especially in the last month or so, silver price has gone down. We know oil price has gone below 100. Copper prices have crashed. That's all telling us the market is hinting recession is coming. There's not going to be a lot of industrial activity. If the components, the cost price of all these items are falling, then basically you can expect the end products that end up on the supermarket shelves, the things that you purchase from Kmart, from Target, from IKEA, are going to go down in price as well. So therefore, we are expecting peak inflation. So if we get peak inflation, then that's, again, come back to this chart. So we just saw that, these These three instances where inflation peaks and market bounces. Inflation peaks, market bounces, right? They are not huge bounces. If we look at it long term, they're like off the low, they bounce like 60, 70%. So then we look at today, right? Today, inflation rate is quite high. It's at 9.1%, as you can see, right? 9.1%. If it comes down, because oil prices, copper prices have all come down. If by say August, the next CPI figure, and by September, we have peak inflation, we have this purple trend line, we have it coming down, then SP 500 could bottom somewhere around here and bounce up, and that would be a quite reasonably big bounce. So like what's the low here? The low is 3,600. So like a 40% bounce would take it to just above new all-time high, right? SP 500 has only been down 23%. If it was to bounce 40%, it would just make a new all-time high. If it was to bounce 30%, 30% bounce would take it to, let's see, the high is 48. Oh, hang on. From here, measuring from here, from the low. Let's say a 30% bounce would take it to 36.47. Would take it to around here. Would it take it to close to, a 30% bounce would take it to around here, to very close to its previous all-time high, maybe a double top and then come down. So this is a situation we really have to watch. It is quite possible that a new we are getting peak inflation, and that means the market is about to bounce and bounce really hard. And let's see. Okay, so but everyone should keep in mind that even without peak inflation, there are such things as bear market rallies, right? We're using the Dow Jones chart, but just keep in mind, Dow Jones, SP 500, they move quite similarly to each other. This is from, during the 29 to 32 crash, you've had, bear market rally, 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 bear market rally. Then finally it ends. We could get something like this. This could be like from 200 to almost 300. That's like a 48% move, right? Here, even this one looks tiny, but that's a 35% move. We could be looking at something like that. So eventually I am expecting the Bitcoin to end up somewhere in the 12 to 15K area, or maybe even lower. I don't think 17K was the bottom. I'm not 100% sure about that, but unless they resolve the stagflation problem we're in, then I don't think Bitcoin or stocks are out of the woods just yet. Another chart we can look at, this shows the fear and greed. It's like for SP 500, it's like fear and greed chart for Bitcoin, but except for SP 500. And we can see that it's smoothed by a 100-day moving average. We can see whenever it hits this green line or gets very close to it, which means extreme fear, right? Markets bounce up, right? Here, small bounce. Here, major bounce. Here, it's not quite the bottom of the market, right? But it's close enough. Here again, picks the bottom of the market, bottom of the market, bottom of the market. Here, interestingly, in the COVID crash, fear and greed index didn't get that low because it's a 100-day moving average. It needs the 2000 March 2000 crash was way too quick. Here is where we are currently, and now we are almost as low as, we're kind of pretty much as low as all of the last few major crashes. Even the 2009 GFC crash, it's as low as the amount of fear in the market right now is as low as the 2009 GFC crash, and then basically the except the 99, the 98, 99 mini crash. So chances are we get another big bounce in the stock market, Is it possible for the stock market to come close to the all-time high? It's possible, although I think that's a smaller possibility. I think this is a bear market rally, which means we bounce 30, 35% from here. That's a big bounce. And Bitcoin could make a pretty decent bounce as well. So for now, for Bitcoin itself, it's basically traveling in this rising channel. I'm thinking Bitcoin could make, if it breaks up, then the rally is on, and really the resistance would be something around 27.8. Let's call it 28K. Yeah, so if it bounces up, then the resistance is around 28K here. Why? Because we have a series of bottoms around 28K here, and then turn down. But however, before it bounces up, I think there's a good chance we get a retest of this area, which is 19.5 or just under 20K. We might even get a break of this area, get a retest of 17. If it's really bad news, then even lower. Something like a breakdown here to 17, or maybe even a breakdown to say 15, then we bounce up. That's kind of what I've got in mind. It may or may not happen. Why do I say that? Well, because I know Ethereum's kind of bouncing right now, but I think it's jumping the gun a little bit, because look at this coming up. Next Wednesday, Netflix reports earnings. Next Thursday, Tesla reports earnings. And then the week after, Monday, Google and Microsoft reports earnings. Then Facebook reports earnings. And then on that day, the Federal Reserve decides it's going to hike 75 points or 100 points. And then they have the speech. And the speech usually gives us a lot of clues on what's going to happen with the Federal Reserve. And then a day later, the big kahuna, Apple, right, the largest company here by far, reports earnings. And then Amazon reports earnings. When they report earnings, markets tend to get shaken out. Let me just show you guys. Last time they reported earnings, let's see. Let's turn this into a daily chart. So 3 months ago, around say the 25th of April. So where is it? 25th of April. Here, this period. So we saw, so from here, right, like all the way up to about here. So we look at this. Look at these big red bars here, right? We saw, I remember it was Netflix and Facebook had really bad earnings, and then they basically took the market down. So and look at that. That's actually, the market pulled back, but these were big days of markets falling. So what I imagine could happen, I mean, yeah, people are buying Ethereum right now, trying to push it up, thinking, yeah, it's a peak inflation, the bull market is coming back. I'd say give it a day or two. Let Ethereum confirm its breakout first, because Bitcoin hasn't broken out yet. It's still in that rising channel, and then we know whether it's the bull move, the bounce is back on or not. So here, for example, let's see, you've got SP 500. What if we have really bad earnings and SP 500 retests this low again, right? And that's going to bring, or even go a little bit lower and then bounce up. And that's going to bring Bitcoin down. So let's look at NASDAQ. For example, this is the QQQ. There's a very good chance that the NASDAQ, I think, comes to at least on the QQQ, the 267 mark, which means on bad earnings from, say, Facebook or Apple or Netflix, it hits something like here, 267 right area, and then bounces up. Or it's even possible that we get a bounce to where the COVID high was, 236. Because remember, this was just before COVID happened, before the whole market crashed. This was around the 236 area. It's possible during the earnings of the Fed meeting, if the next 2 weeks we have the market do something like this, and then bounce up on peak inflation, or do something like this and then bounce up. Both scenarios are possible. So, and that's why I think we got to watch out for Bitcoin doing like a retest of 19.5, or more realistically, break here, do a fake out slightly, go to 17.5. 17.5, Bitcoin goes to 17.5, and then bounce up, and then that forms the bottom. Or if it breaks this low 17 area and then it move down to 15 to 12K is possible. I can't rule that out. 15, 14, 12K, something like that, and then huge spike bottom, spike down, wick up, wicking down, and then bounce up from Bitcoin. That's entirely possible as well. The other thing we'd like to keep in mind is, so in general, if we are saying for the next few months, I think it's quite possible, having seen the charts we just saw, that we are experiencing peak inflation, and somewhere around this area, between 20K to say 17K or even 15K, somewhere in this area is the bottom, and we bounce to at least maybe say 26, 28K, and maybe even higher, right, to 35K is 37K. That's possible. It's possible, like a big bounce and then come down and ultimately maybe hit 12K or even lower later in the bear market, like end of this year. That's possible. So for now, though, I think anytime it makes a big drop down is a chance to buy. Not financial advice, but what I'm going to do is set some buy stops lower, say around 19, 18, maybe 15. It's possible. These are not my long-term investment positions because I think it ultimately can go lower. These are more of a medium to short-term trading position. If it comes down below 19K, let's pick it up, and then I'm expecting the bounce to be probably aim for 28K there. The other thing to keep in mind are the 3 Bitcoin stocks, for example, like Coinbase. So if you notice that this is actually, Coin is now actually in forming this downward pointing triangle, right? 3 pivots here, and it's three pivots here, and basically it could break up or it could break down. Now you might think, oh, you've told us nothing, but I'm telling you that this is a big pattern that's formed over the last month or so. No, since May. So that's been forming for 2 months, and whether it's a break up or break down could actually should be a big move. GBTC Grayscale is also forming this. I think this has been for the last month, right? This is forming this trading range. If it breaks down here, then it'll be a big breakdown. If it bounces from here, should be a big bounce as well, up to at least 18. Same thing with MicroStrategy. MicroStrategy is kind of in this rising channel as well. Also, well, MicroStrategy, if we look at it this way, MicroStrategy is in a equilateral triangle or a equal triangle. It can, near the end of next week, or early the week after, after the Fed meeting, can bounce up or break down. And either way, I think it'll be a big move, because if it breaks down, then that'll be the bottom, and we get peak inflation, and then a big move to the upside. If it breaks up from here, then we go for a big upside. So in general, for the next few months, I'm looking for peak inflation, and I'm looking for a big move to the upside. But for the next, say, 7 to 14 days, I'm thinking there is a reasonable possibility we get a breakdown. I'm analyzing for people in my Discord. They should know that I look at the 3, Bitcoin sensitive stocks like MicroStrategy, Coinbase, and Grayscale Bitcoin Trust to see where Bitcoin's headed. And by the way, this video, as always, goes to my Discord first, and then 2 days later or 3 days later, I posted it out into the public. So I'm thinking, in general, I'll say my position again. I think 6 to 18 months from now, I think we should see the Bitcoin bottom, and it might go as low as 12K or even lower. But for now, it is possible for it to bounce up here because we're having peak inflation. Could be quite a big bounce, 28K is quite a possible target, might even go higher. And for now, for the bounce, basically, it could bounce up from here, but I think we're going to get some bad earnings reports. And in the short term, I think in the next week or two, we might get a pullback to, say, 19K, 18K, 17K, right? Maybe if 17K breaks even down to 15 or 12K, something like a bad flush here, and then bounce up. So anytime it pulls back and makes a big drop to, say, below 19K, below 17K, then I think that's a chance to buy, because a big bounce is coming, because we're having peak inflation and a big bounce is coming. Okay, not financial advice, and I hope that's helpful to you guys. Thank you for your time. Cheers. Bye-bye.